If you're a business professional and you're struggling with figuring out whether life insurance is still worth it once you retire, this episode's for you. Most people think that life insurance is for young families, mortgage, kids, income replacement. That's the script we've been handed. But here's the deal. In retirement, life insurance takes on a completely different role. For some, it's a wasted premium. For others, it's the single smartest tax and legacy tool in their plan. Think of it like keeping an old subscription. You don't want to pay for something you're not using, but cancel the wrong one, and suddenly you lose the benefits you didn't even know you had. Today, you'll learn the surprising rules life insurance can play in retirement, the mistakes professionals make when they cancel too early, and the simple framework to decide if it still belongs in your plan. Let's dive in.
You're watching My Hybrid Retirement Weekly, the show that helps professionals work less, earn smarter, and embrace more financial freedom. Hosted by Rob Leiphart, a fiduciary advisor. New episodes drop every Tuesday at 12 p.m. Eastern. Subscribe now and start planning retirement on your own terms.
Hi, everyone. Rob Leiphart here for another episode of My Hybrid Retirement Weekly, where we take complicated retirement challenges, strip them down, and rebuild them into clear, workable strategies so you can retire with confidence. Quick question for you. When you think about life insurance and retirement, do you see it as a burden or as a tool? Either way, today we're unpacking one of the most misunderstood retirement riddles. Do you really need life insurance when the paycheck stops? Retirement today is not 5 to 10 years. For many professionals, it's 25 to 30 years, longer than some careers. And your money has to stretch the entire way. Here's the problem. Many retirees cancel their policies as soon as they're debt-free or the kids are independent. But that's only half the picture. Picture this instead. You've built your savings like a house. Strong walls, sturdy roof. But the life insurance? Well, that's the fire extinguisher. You hope you never need it, but when you do, it can save the entire structure. This is why life insurance matters. It's not about protecting income anymore. It's about protecting your plan from taxes, from healthcare shocks, and from leaving your family in a lurch.
The role of life insurance when you're planning for your retirement is to have a tax-free endowment. Once you've stuffed cash into that during your working years, you're able to pull that out tax-free and live off of it without any penalty from the government, as well as when you do pass away, you now have a tax-free lump sum endowment left over to your family.
Here are 4 key principles for life insurance and retirement. Principle number 1, wealth transfer. Life insurance can pass money to kids, grandkids, or charities tax-free. Principle number 2, tax efficiency. Cash value policies can be tapped for tax-free income, especially when the market's down. Principle number 3, healthcare protection. Newer policies often include long-term care or chronic illness riders, helping cover costs Medicare won't. Principle 4, peace of mind. Even if you don't need it, life insurance can keep you from selling investments at the wrong time. We just had a question come in here. Janet from Dallas asks, if my house is paid off and my kids are on their own, do I still need insurance? The answer, maybe not for the income protection anymore, but if you want to leave a legacy or reduce taxes, it can be a very efficient tool.
It's not just for billionaires, philosophers, or famous people. And we always hope that, that we as a people will leave a good legacy. But keep in mind, as I talk today, that legacies can be bad too. So we want to think about that. So does your legacy really matter? Does it matter whether you have a legacy? I think it does. You may or may not, but I think it does.
Waiting to decide what to do with life insurance until you retire is like waiting until the storm hits before checking your roof. By then, your options are limited. The earlier you evaluate your policies, the more choices you'll have, whether that's repurposing old coverage, converting to paid up, or leveraging tax-free withdrawals. We have another question here from Brian in Denver, Colorado. Can't I just cancel the policy later if I don't need it? Well, sure you can. But once you give it up, you might not be able to get it back with the same coverages, or you might not be able to retain the same coverages, especially at the same costs. That's why planning early keeps your options open for you.
There's a client I was working with who's an attorney. They would frequently throughout the year receive large lump sums of influx of cash when a case closes, when they have a client, things like this. And so they needed to be able to sporadically dump large amounts of money, 100 grand, 200 grand into these policies. And I told them as long as they're able to contribute every year for 10 years, and as long as the total amount every year was going to be the same, they could do it sporadically throughout the year, but as long as the annual amount was the same, they'd be able to build a plan where they could sporadically contribute each year, every year for 10 to 15 years. But when they sell their practice, when they step away from their practice, whether they sell it or just close it down, they're going to be able to receive an income for life that's tax-free. And they were happy about that because they loved what they did and they made great money. But they were honestly looking forward to a point in time when they could just be with family, hang out, retire, and not worry about everything they're doing right now.
So let's recap. We covered why life insurance still matters in retirement, the 4 roles it can play: wealth transfer, tax efficiency, healthcare protection, and peace of mind, and why early planning gives you flexibility. Here's a quick story. 2 professionals, same savings, both retire at 65. One cancels his policy to cut expenses. The other keeps hers and used it strategically to fund healthcare and pass assets on to her kids, tax-free. 2 very different retirements. If you want clarity on whether life insurance belongs in your plan, book a life insurance strategy review today. In the review, we'll analyze your current policies, stress test them against your retirement plan, and show you exactly how to either repurpose, keep, or drop coverage with confidence. And don't forget to subscribe every Tuesday at noon for My Hybrid Retirement Weekly, so you never miss a strategy that could save you taxes, protect your family, and add confidence to your retirement. This has been My Hybrid Retirement Weekly. Thanks for joining me. Until next time, stay intentional, stay purposeful, and keep building the retirement you deserve.